Serious message by the Chinese government about NIO stock. Explained. The country's response in March harmed NIO supply partners, but the investors did not panic by selling NIO stock. In this video, we're going to discuss Tesla stock, all stocks, stock market news game, AMC, money generating, and more. The stock market keeps in mind that space is constantly surprising us, so attempt to keep up. Providing the most recent stock market news, China's reaction to the new COVID wave has been detrimental. Investors were not alarmed by NIO supply partners. By selling the stock of NIO Rather, shareholders are rewarded, willing to hand over control to the Chinese authorities, pandemic in the best possible way for its inhabitants. Meanwhile, NIO clients can wait patiently. Delays in the delivery of electric vehicles, or EVs. Welcome back to our channel, Stock Market News. Hey, watch the full video, as it's going to get more interesting, and if stock markets interest you, you came to the right place. An urgent message was just dropped by the Chinese government about NIO stock. When the NIO stock would suspend the production due to supply chain disruption earlier this year, it had no choice in the matter. This is because China had a ruthless zero COVID policy, and the rising COVID cases in the Shanghai region forced the government to lock down the city. But, to my astonishment, the bailout was successful. NIO's production issues were overcome by JAC. Its design drew the attention of senior officers. In 2020, the stock was on fire, riding the Chinese electric vehicle boom. In January, the stock hit a high of over $67. The stock has dropped since then. While shares have fallen by 6% since April 13th, that is still a significant drop. That's a win, given the government's increasing crackdown on technology and fast living. What and all happened until now, William Li established NIO. He describes himself as the Chinese equivalent of Tesla CEO Elon Musk. In September of 2018, the stock went public, promising to better customers' lifestyles with NIO houses, which served as clubs for upwardly mobile professionals. In general, the Chinese government has been willing to use a variety of policy levers to help the electric vehicle industry. Purchase rebates and tax exemptions are examples of these incentives. For example, the government imposed restrictions on obtaining a license plate to reduce pollution by limiting the number of new automobiles on the road. Several municipal governments, however, have begun to ease restrictions on the purchase of new electric vehicles. Despite these incentives, the COVID-19 outbreak had a substantial influence on EV sales in China for various automakers. Last year, sales began to stutter as the government began to gradually reduce its support to eliminate subsidies by 2020. However, there were significant production issues. After batteries caught fire, cars were recalled. Even Tencent Holdings' assistance was insufficient to resolve these issues. The story appeared to be coming to an end. The government then arrived. They had come to assist. During the worst of the pandemic, the hi-fi government invested $1.4 billion in NIO, integrating it into the local supply chain. The deal was unprofitable on paper, but it solved the scale issue. NIO might concentrate on marketing and technology. NIO stock was sent to the moon thanks to government assistance. It was suspicious about investors returning to the Chinese government's good graces. They seem to think otherwise. NIO stock might now approach its all-time high of $56 per share, according to Goldman Sachs. Manufacturing issues, as well as quality issues, appear to have been resolved. The business has unveiled the ET7, a revolutionary sedan based on the Tesla Model S that can travel up to 600 miles on a single charge. It also boasts LiDAR-based self-driving capabilities. This is a technology used by other electric vehicles, but rejected by Tesla. NIO's quarterly sales surpassed $1 billion for the first time in December of last year and have remained strong since then. Sales in the third quarter were more than double those of the previous year. This year, it is expected to generate $5.6 billion in revenue. Next year's sales could reach $9.4 billion. NIO's market capitalization of $59 billion is roughly 6 times those sales. Profitability, the most elusive feature of all, could soon be a reality for NIO stock. Tesla stock is worth more than 20 times its current value. When it comes to new sectors, China's government follows a Korean strategy. It substantially subsidizes new industries. It allows numerous businesses to compete. It then consolidates into a few firms capable of taking on the entire planet. NIO is one of those enterprises, as is JAC Motors. The NIO stock bottom line. There are currently around 300 EV brands in China alone, and it is already one of the most popular among them. The company has made great progress since releasing its first electric SUVs, such as the ES6 and ES8 a few years ago, and the latest earnings reports for fiscal year 21 show that demand for its vehicles is still high, with NIO delivering 91,429 vehicles last fiscal year alone. This marks a 109.1% increase, and its total revenue for the period climbed by 122.3% to $5.67 billion, while its gross profit of $1.07 billion increased by 64.1%. In comparison to legacy automakers, NIO is still not a mature brand, and as a result, it remains unprofitable. Its net loss in fiscal 21 stood at $630.3 million, a 24.3% decrease. Despite this net loss, the company continues to successfully increase its brand and awareness within China, leading it to believe that sales of its vehicles will continue to grow with each passing month. The latest deliveries data released last week shows that in March alone, NIO shipped approximately 10,000 vehicles in Q1 22 compared to 25,768 in Q1 21, an increase of 28.5%. Furthermore, in March of this year, NIO will introduce its newest flagship electric sedan, 87, which has been well accepted by the public. However, it will have a considerable impact on deliveries only in Q2 and beyond. NIO's main advantage is that its operations are based in China, which is the world's largest EV market, with all the potential to develop in the next years, while China remains the world's largest user of coal. It continues to recognize the need to decrease its carbon footprint to face the ongoing environmental concerns. China signed the Paris Agreement in 2015, and it has set an ambitious target of achieving a carbon-neutral nation by 2060. The country has already made the largest investment in renewable energy, and Beijing believes that the EV industry will be critical in assisting the country in meeting its climate goals by 2035. Beijing aims to ensure that all cars sold on the mainland are either hybrid or fully electric, thanks to new opportunities to continue to increase vehicle deliveries each year as it operates in a highly favorable environment. After a successful bailout, the same Wall Street investors who spurned Tencent after the government cracked down are now pounding the table for NIO stock. The stock of NIO is still linked to the Chinese economy and government. Local governments and real estate developers are saddled with massive debts. This winter, there will be an energy scarcity. There will be lifestyle restrictions that will reduce productivity. Xi Jinping's regime is diverting attention away from this by threatening Taiwan. NIO will soon grow outside China's borders. It will, for example, expand its footprint in Europe and more than 25 nations throughout the world. As a result, as NIO advertises its latest ET5 electric automobile to worldwide markets, its revenue potential will increase. Second, the business may be able to provide a battery swapping station option. While most EV manufacturers rely on charging stations, NIO stands out with its battery swapping station. Furthermore, many NIO cars will be supported by the stations around Europe. NIO, on the other hand, is secure as long as Beijing favors William Li. It is believed that the stock has a floor beneath it. The Chinese economy, however, has a ceiling, and $56 can wait. While state backing is critical to NIO's success, it has come at a significant cost to the corporation. Other operational and financial hazards have taken the place of NIO's insolvency risk. In the meanwhile, the government has assured a profit on its investment. To provide you with more stock news, all you need to do is like the video and subscribe to the channels to never miss any updates, and let us know in the comments section which stock should we talk about next in the next video. I hope you like the content, and we'll see you soon!